15 minutes late. I had to finish up dinner. But anyway, who am I? I'm Garlinda Price, and so I'm getting on here tonight because I had scheduled to talk to everyone that is self-employed, right? So this is my 32nd, going on 33rd year in business as a self-employed individual, as a business owner, right? And I have loved every moment, let me not lie. I've loved the journey, but not every moment of the journey, right? Because it's entrepreneurship is tough, right? But what's really awesome is that if you stick with entrepreneurship, if you stick with self-employment, the word of God says it best in Proverbs 14 and 23, in all labor there is profit, right? So I'm going to be checking the chat down below to see if we have any questions as we go through the information I want to share with you on tonight. So who am I? I'm Garlinda Price. I'm a real estate broker and owner of Fusion Properties LLC. I own a real estate firm here in Fayetteville, North Carolina. I'm also a licensed life insurance broker, and I own Fusion Insurance also in North Carolina, but I have licenses in several states, right? So I can work across the country whenever I want, wherever I want. And we are currently recruiting in 49 states. So if you've ever thought about getting your license, let me know. It is a perfect side business to your business, whatever it is that you're doing. I started selling life insurance alongside real estate, and it is a perfect accompaniment, right? So, are you self-employed? Do you own a business? What constitutes self-employment? You're your own boss. You set your own hours. You go to work when you want to work. You make the money you want to make or don't make if things change or if you don't show up, right? So, everywhere in between, you're the janitor, the CEO, the marketing, social media guru. You're the cleanup person. You're you're everything, right? You're the rainmaker. You're the lead generator. You're the recruiter, right? And then at some point you begin to have a team, right? So along that journey and along the process of self-employment and entrepreneurship, you've got to begin, and I don't want to tell you what you have to do. You probably have already thought about, I need to prepare for retirement. You probably have already thought about, because I was always thinking about this when I was a self-employed person. I was always thinking about, how am I going to fund my retirement? I was always thinking about, where's the money going to come from for health insurance, especially when I got pregnant with my children, and I was worried about where that insurance was going to come from, right? Stressed out. And I say that because I used to own salons, right? So I did hair for 14 years. For 8 of those 14 years, I owned salons. On the other side of salon ownership and doing hair for another 4 years after that, I ran successful salons and spas. So I was in that beauty industry for close to 20 years, right? 18 years. And even still own a line of color cosmetics, a line of skincare, and I have my own hair care line. So I understand starting a business. I understand launching a business. I understand all the ins and outs and the fluctuations in income. But I also understand, right, that many of you have a cash in the hand business. Many of you do. You have a cash in the hand business. Cash comes in, cash goes out. Many people have automatic drafts, billing things come into their account and go out. And a lot of times people would say, well, I don't have extra money, or I'm not making money in my business. Well, it's not that you might not be making money. Maybe you're just spending the money, right? Or you're in the beginning stages and you have a lot of startup costs or overhead, whatever the case may be. Somewhere in there, it's on your heart that you've got to get some protection in place for yourself, for your family. What if you get hurt? What if you get injured? What if you can't work, right? What if you want to take a vacation? What if you want to invest in real estate? What if you want to buy a home? That is the toughest thing to do, is to purchase a home when you're self-employed, because most people don't want to do it the right way, where you have to cause yourself to have a bit of a tax liability because you can't write everything off. You have to show income. And it's this tricky little thing that you have to do in order to be able to make yourself an employee. You're an employee of your corporation. You showed it, but you have to pay payroll taxes and, take out the proper deductions. And that can be super expensive. Been there, done that, got all the t-shirts. Whew, it was not fun, right? And so, but what's awesome is that once you get on stable footing, and if you are on stable footing and you have all this income coming into your business, you've got to protect that, right? For you and your family, because what if you represent to your family a 6-figure income? I represent to my family a 6-figure income, right? Through the grace of God, not through boasting and bragging or anything like that, right? It's all through, I say it humbly, but I say that to you for a reason, because God forbid I need to be able to not God forbid. I don't want to say that, right? They need to be able to live the same lifestyle or better or comfortably in the event I wasn't able to be that breadwinner. I'm not the breadwinner in my home, but if in the event I wasn't the person out there able to bring this type of money into our family if I wasn't working, right? So we've got to protect that. We have to protect our assets on this side. And there's some things I still want to put in place and need to put in place. So what I came on here to talk to you about tonight, and I only want this video to be about 20 or 30 minutes, is the things that you can put in place as a self-employed person. And we're going to talk about the least expensive thing first and then the other items, right? And it's not expensive, it's an investment. Insurance as an investment. And I know that many of you know that, but some people see insurance as a bill. It is not a bill. It is not a debt. It is an honor that you get to have insurance to make money on this side of heaven, that you can access on this side of heaven with what we call living benefits. And we're going to talk about that you can use while you're still alive, right? Investments that aren't tied to the stock market, but are tied to the S&P 500, where you can become your own bank and create your own bank, right? And so when I kept seeing people talk about private banking, I was like, what is that? What is private banking? And it seems so complicated, right? Because people are like, you can borrow, the wealthy people borrow from themselves. Well, borrow from themselves how? Where are they getting the money from? And then they were saying it was from insurance. Well, what insurance policy has money you can borrow against if you ain't dead, right? And so even though you can borrow from whole life, I was like, what are they talking about? And so what I'm so excited about is I'm just going to be quiet. I'm going to start talking. So the first type of insurance that you should think about getting as a self-employed person, and let's say you have a very small budget, you should start with at least an accident policy, right? Now, I'm not a fan of accident-only policies by themselves, but at a minimum, let's say you're like, Garlinda, all I have is $25 a month to invest in insurance. That's it. I can't stretch another dime, another dollar, then okay, we'll let you start there because you need to start somewhere and have something. So you can get accident-only policies in the face values of $100,000, $150,000, $200,000, $250,000. I think you can get $300,000 of accident-only coverage, and it goes from $25 to $33 to $40 to $50 a month. So it goes up incrementally. That is a great place to start if you have a very tight budget. If you are in great health, right? You're not on a lot of medications, you haven't been hospitalized, you have a great driving record, you're still below the age of 45, you should do a term product, right? Why do I say that? Because you can get a term product that will cover you for 30 years. Right? That term product is super inexpensive when you're young, right? So when you hear people saying, oh, I have a $500,000 policy, I'll ask people, is that through your job? And if they say yes, okay, you still need to own your own policy because that policy is cheap now because you're a part of a group. When you leave that job and you're no longer part of a group, you don't have group insurance, you don't have group coverage, you don't get group rates. So that's not your policy. That policy is owned and paid for by the company. You are simply benefiting from it because you work at that place. Everyone needs their own independent insurance policy, right? So a term product would be a great product as a self-employed person, and especially if you're young, under the age of 45, right? Because it's less expensive. So that's what you should think about getting for yourself. You can get it in any dollar increment, but what's even better is now they have a term product with a return of premium. Say what, preacher? A term product with a return of premium. So if you have additional money that you can invest in your insurance to protect your life while you're alive, right? You can get a term product that will that will pay you back at the end of that term, that 30 years, it will give you all your premiums back. Some companies will give you back 75% of the premiums that you put, less any fees that you put into the policy. Over that 30-year period, you're going to get that back in 30 years. What's an example? Let's say that you purchase a term product and you're 40 years old. At age 70, you're going to get back 75% to 100% of the premium that you paid in. No interest is added because the term product, you don't earn interest on term. At 70, you're going to get that money back. And guess what? You can invest it. I would encourage you to put it back into a whole life product, so you still have permanent coverage through age 120, but you can do whatever you want to with it. So it's like you had free insurance to cover your life during your working years, during your mortgage years. A lot of people use that for mortgage protection. So then that's a great policy. Another really awesome product, if you're over 40, right? 40 and up, because 40 to 45 is that weird age where you could do term, you could do whole life, but it's going to depend on your health, which one you should do, which is going to be the least expensive, and which direction to go, right? The younger you are, the more expensive whole life is. The older you are, in my opinion, the less expensive it can be. So if you're over 45, over 40, over 45, and you're self-employed and you own a business and you're like, okay, I don't have any insurance, I don't have enough insurance, so I need to get some more insurance, you could get a whole life product, right? And what that product is going to do is it's going to pay you for your whole life. It never goes away. It's good until your age 100. It goes away if you don't pay it, right? If you let your policy lapse and the premiums lapse and you don't pay it, then it goes away, right? So you get the whole life policy. It's good to age 120, but what's awesome about it is you can borrow against the whole life policy. Once you have a certain amount of money in the account and the insurance your insurance policy will tell you that time frame. Once there's a certain amount of money in there, you can begin to borrow against the whole life policy at a 5.6% interest rate. You just became your own bank. So you can borrow your money, but now what happens with a whole life product is any money that you borrow from it decreases from the face value of the policy. What's an example? Let's say that you have a $40,000 whole life policy. That's kind of high, but there are companies that do $40,000. A really great company I can think of. You have a $40,000 policy, and let's say you borrow $1,000 from the policy. In the event of your death before you pay that policy loan back, because it's considered a loan at a 5.6% interest rate, which is cheaper than any bank, right? When you borrow that $1,000, if you don't pay it back before you die, then that means that now you have $39,000 as face value, because when you go to pass away, before the before the insurance company pays your family the policy face value, they're going to subtract out the $1,000 loan. Does that make sense? The other thing that's awesome about a whole life product is not only can you borrow against it, it has double indemnity. What does that mean? That means that if you pass away naturally with the right, not all, let me not say all of these products are things that we represent and that we sell, that I carry through my company as a brokerage. We represent about 10 to 12 carriers. So the products I'm talking about, not all term and not whole life is the same. So if you buy from somebody else, you need to get the details, right? I'm talking about the products I represent and the carriers I represent, what their products do, okay? So you can have what a whole life product does for the companies I represent. If you pass away naturally, let's talk about that same $40,000, then your beneficiary will receive a lump sum of $40,000, or they can opt to receive the payouts monthly, just like receiving a check every month, right? They would get that. They get to decide, when you pass away. The other thing that's great about it, why we call it double indemnity, is that in the event you die of an accident, that $40,000 doubles to $80,000, but you're only paying a premium over the life of the policy that you have it on $40,000. How cool is that? Now, even though you can borrow against the whole life policy, it doesn't make money, right? It doesn't earn interest, but you can make, it doesn't earn interest, but you can borrow against it, right? Still a great product, still a great policy. The other policy you should think about getting is a final expense policy. Let's say that you have all that stuff covered, or you have a real bare minimum investment that you can make, and not saying it's cheap. You don't buy insurance, you qualify for insurance based on your age and your health and your prescription history. Right? The companies I represent that I could shop around for you, we don't require any medical exam, no blood work, no urine. Depending on the amount of the policy, if it's over a certain amount, for example, if someone wanted a $600,000 policy, or a swab test would be required. So they do a saliva test, okay? So some things over certain amounts require a saliva test. So let's say you're like, well, Garlinda, I just want enough to pay for my funeral, to pay for their funeral in the event something were to happen, so their family is not burdened. And the average funeral costs about $18,000 at a minimum, right? $18,000. To be cremated costs anywhere around, I think the last time I talked to a friend of mine, a funeral director in New York, it's like $8,000 to $12,000 at a minimum, right? So let's say that person says, well, I just want enough to cover those expenses. Then what we can do is put together for them a final expense plan. So if that's you and you're like, okay, I just want to have enough for that, right? That's a blessing. That means that your family doesn't have to pass the plate, do a fish fry, do a GoFundMe, do a bake sale, ask for donations. They don't have to do any of that stuff in the event of your death because you took care of it and you prepared it, right? You prepared for that. And you also maybe want to leave a legacy, right? You maybe want to wealth build. Let's talk about that. As a self-employed person and as an entrepreneur, one more insurance product, then we'll talk about that. Living benefits, right? I'm only talking about hairdressers, but this is anybody. Let's say you drive trucks long distance. Let's say you have a tax business. Let's say you're an accountant. Let's say that you own a spa. Let's say that you sell real estate. Oh my gosh. Or you're a mortgage broker and you get paid on, everybody gets paid on commissions, right? Whatever you do as a self-employed entrepreneurship, we're talking to all the different business types, right? So another insurance that you want to think about that you could put in place, and it just left me just like that. It escaped my mind because I was talking too much, right? So anyway, so if you think about doing investments, right, and you say, okay, as a self-employed person, I have my insurance in place, I have all of those things taken care of, but I want to be able to invest for my future. I want to be able to fund my future. First of all, I want you to know that regardless of how old you are, it's not too late. I used to worry so much about retirement as a business owner because I've been self-employed for 33 years. So I don't have a 401k. I don't have an IRA. I don't have any of that stuff that I can fall back on to retire. And I was like, well, Lord, I ain't never going to be able to retire. I'm going to have to work until they put me in a box, right? Well, I'm not going to be buried, be cremated, right? But I would stress about that. And so until I came into the insurance industry and heard about the fact that, I'm lying before then. You could do a set IRA. They have all these self-employed IRAs and things like that. But I never heard of index universal life, right? And I had heard of annuities, but I didn't even completely understand annuities. So with index universal life, what's awesome about that is as long as you are in good health and in the IUL, what we call an IULE, an Index Universal Life Express, it has two components. It's like a hybrid, right? That's what I was going to say about insurance. You can have a term and a whole life product. These can all be hybrid products. You just can't have two term policies at the same insurance company. You can't have two whole life policies at the same insurance company, but we could do hybrids, right? So investing. You don't have a 401k, or you have a 401k as a self-employed person from a job, and you need to roll it over because maybe it's tied to the stock market and it's been losing money. Or maybe you have an inheritance, or maybe you have a large savings and it's just sitting in the bank, earning you no money, losing money, because every night at midnight, your money goes out and the banks invest your money in the stock market. They invest your money in different businesses, and then when the bank reopens, your money's sitting there again, right? So if you are a self-employed person and an entrepreneur and you say, well, how can I prepare for retirement and how do I use insurance to fund that retirement? Ooh, I just remembered the other thing I wanted to say. Let me write myself a note. Let's see. Okay, I had to write myself a note so I don't forget. How can you fund that? You can do that through an index universal life. So what that is it's a renewable term product, right? That normally would give you more coverage than a regular life insurance product because it's associated and tied to this particular account, to this particular product, I should say. So it's a renewable term product, but it also has an investment component that's tied to the S&P 500. It is guaranteed not to lose money. It's tax-free. Right, the dollars that you earn. It is an incredible product for you to begin to build and grow wealth. And how does it differ from a whole life product? I have an incredible video. I'm gonna figure out and see how I can upload it and share it. Shout out to Bernard Burgos. He's with the Chosen Ones with Family First Life, and he did this incredible video that talked about whole life versus this plan. So what's cool about an index universal life product and what makes it different, remember I said with the whole life product that you can borrow from it, but it doesn't earn interest. It doesn't grow in terms of money. this does. This product, this index universal life product, the renewable term part of it gives you your death benefit. But the S&P index tied part of it gives you your money that begins to build, right? And what ends up happening is over a certain amount of time, when you, let's just say 30 years from now, you've reached the end of the renewable term, so that insurance goes away. But at this point, you've maybe doubled your money in the income portion of it, and you're guaranteed no losses. The account can never go below whatever the basis is that's associated or attached with that account. Let's say it's 0.25%. And then you have, of course, you can't go over a certain amount. With some of the accounts, you can go as high as 9%, right? What is your bank paying you on your money? I know my bank's paying me. I'm not gonna dog them out because I like the bank, but I'm not leaving my money in that savings account. My money is in an annuity, right? And going into an index universal life product, which is awesome if you are in great health. If you're not in great health, then annuity is perfect. Why? Because an annuity is not attached or associated with a life insurance product. So that means you would still need a life insurance product, and you could also have an annuity, because guess what? Your health is not tied to an annuity. It doesn't ask health questions. It doesn't look at your health. It doesn't look at anything associated with medications or any of that stuff. And so an annuity is a great investment because it builds and grows wealth over time. Guess what? Not only does it build and grow wealth at a certain interest rate, you're guaranteed not to lose. It's tax free money that you can borrow from yourself at a same similar 5.6% interest rate. So now, instead of going to the bank asking for a loan and getting turned down, guess where you're borrowing from? Private banking, yourself. Guess where your money is growing? In your account, yourself, and you get to fund it, max it out every year to whatever the stipulations are in that policy that you get to decide. You now get to control your money, and you are your own bank. That is how people get wealthy. That is how they're using insurance to fund their retirement. That is how they're using insurance to grow generational wealth and leave a legacy. But that's how they're growing their retirement accounts, that they can then, an annuity will, at the point that you decide you want to start getting paid after 59 and a half, you can start getting paid a regular paycheck just like you were working a job from your own money. And it's not just being thrown away. And you can start with a small amount and grow from there. It doesn't have to be something crazy that you start with. Now, some annuities do require that you start with $10,000 minimum, but there's an annuity product that is really popular with my clients, with one of our incredible carriers, and you can start that for, you decide the budget. $100 a month, you decide the budget. And you can do it for kids. For kids. So it's not just for adults. You can start these policies for your children. That is why it is generational wealth building. We just didn't know about it. Okay? Many of us in our community did not know about it. And so I would encourage you, if you are self-employed and you own your own business, start investing in yourself, products with yourself. I can help you with that. Give me a call. It's Garlinda Price, 910-494-7798. But I'm going to put my information in the description box. You know how to reach me. Schedule an appointment. I'm going to put my Calendly link in there so you can schedule an appointment. So the other product, I was talking about living benefits. I had to make myself a note and go back, and then we'll close on this. With living benefits, you can get attached as riders. Two more products. Wait, I forgot about something else. Okay. I had to make myself a note. Attached as riders to your insurance policy, you can get living benefits, critical illness, chronic illness, terminal illness, right? Chronic illness, let's say that you can't work because of lupus or because of a chronic illness that takes, that you come down with, that you're stricken with, for lack of a better word. There's an entire list, over 15 or 16 illnesses that qualify for critical, chronic, and terminal illness, right? So you can take a portion of the face value of your insurance and use it while you're alive to pay mugs, mortgage, utilities, groceries. You can use it for whatever you want to use it for. But those are, a lot of times what people use the extra money for. Chronic, that's chronic illness. Critical illness, let's say that someone comes down with a critical illness, and of course there's a list of all those things of what's considered a critical illness. Then you can use a portion of the face value of your life insurance policy while you're alive to keep the money coming into your house. Oh my God, it's so incredible. And so if you're self-employed and you own a business, you don't have to be out there uninsured. Start small, start with a budget where you feel comfortable, and then we can increase and grow from there. But start, right? Call me, start. And then terminal illness. Let's say that the doctor gives someone a diagnosis, they're not making any more trips around the sun. It's it, right? Sadly to say. But they're still alive. And now they need that money that they can live off of. They can get the money from their life insurance product for a terminal illness, and they can use it to pay for the care that they need, to keep them comfortable, medicines, all those things. So there are living benefits when you are a self-employed person that has a policy with these riders attached. The next thing that I'm going to be able to offer you in October is our health products, right? So if you're a self-employed person that hasn't been to the dentist in forever, like I remember those days where I just could not afford to go to the dentist. I remember those days where I didn't have money for my glasses, right? Or for my prescription. I remember those days. And I was like, Lord, it's not going to always be this way. When I did finally get to go to the dentist, I was like, Lord, let me not have to have any teeth pulled. God, please, right? I understand. I was there and I was like, God, I need glasses, but I don't want to spend an arm and a leg on glasses. Thank God for Zendy.com, right? But I'm just saying, I understand that at some point during my self-employment entrepreneurship journey, I didn't have it. I didn't. And so, and then when I did have it, I was so glad to have extra money. I didn't want to buy the necessities, right? Y'all know how we do. Maybe it's just me, right? I wanted to go out to eat, go on vacations, just blow money, because maybe it took so long to get to that part of the journey of money making. You disregard the important things, but now it's time to stop disregarding the important things. So health insurance, dental, vision. I'm going to be able to offer you dental and vision plans, but guess what? These are three of the most incredible products that I didn't even know existed, right? So there's a heart attack and stroke policy that the day you have, if you have this policy, the day you have a heart attack, in that same week, you're going to get a check from the bank because you had a rider attached to your life insurance policy that said if you had a heart attack or a stroke, they will pay you whatever amount of the policy was that you purchased to cover you. And if someone in your family has a history of that, although we don't claim those generational curses, but if it has already happened and you are already diagnosed with high blood pressure and diabetes and things like that, get the policy. And what it'll do is if someone has a heart attack or stroke and they have that policy, it will pay them. Let's say they had $25,000 in coverage. They're going to get a check for $25,000. Won't that take the burden off of finding out not only were they sick, but now they don't have a financial burden while they heal? Let's say that someone gets cancer. They have a cancer policy that can be added on as a rider. It can't be a standalone product, right? But it goes on as a rider. And if that person gets diagnosed with cancer, right, same thing, it will give them a check. Oh my gosh, there's so many products out here. And the last one we're going to talk about, because we're almost at 30 minutes, is guaranteed life insurance, right? So guaranteed life insurance is for people that are 50 and older, right? But it's guaranteed, no questions asked insurance. So regardless if you have all these health ailments, dialysis, amputee, you name it, right? Because cancer is hard to cover, right? So regardless of what those things are, they don't ask questions, right? Now there's a 2-year waiting period, but let me tell you what's so good about that. The first year that you have the policy, the guaranteed insurance, if you were to pass away, your family would receive all the premiums back you paid plus 10%. Let me know if your bank is paying you 10%. They're not, but your family would get 10% interest on the money you had already paid. If you die within the second year, there's a company that will give you 20% interest on the money. So your family will receive all your premiums back plus 20%. Won't that help? Right? That'll help. That'll help cover the cost of any expenses that were left behind in your absence or things that people depended on you for to help. And then on that 2-year and a day mark, you get full face value. You have guaranteed insurance coverage. You can't beat that, right? So if you are a self-employed person, I want you to reach out to me. I want you to call me. I'm licensed in several states and adding states all the time. Right? So if you message me, you reach out, we run an illustration for you, you tell me your budget, I'm going to shop all of the different carriers that I have access to, and we're going to find something that fits your budget that we can try to get you qualified for. See, people tell me all the time when I'm making phone calls, and I'll be calling different people, some I don't know, right? And they'll say, oh, I'm not interested. How are you not interested? I don't need insurance. How do you not need insurance? Do you have it covered? I'm good. Are you? Some people have insurance and don't even know what they have. And then when they find out what they have, it wasn't what they thought they had. Because there's some scam artists out here, right? People think they have one thing, and one in particular is when people think they have a term policy with this high value, and it ends up being an accident only policy. It's some unscrupulous people out here. So we will do a free policy review, right? I'll call people and talk to them. They don't even know what their insurance policies are. Oh, I don't know. I hadn't seen them things. But how do you know that when you go to look for it that it hasn't lapsed? How do you know that you have enough? How do you know that it covers whatever you have going on? Your family doesn't want to find that out later on when you're no longer in the land of the living, right? So we're at 30 minutes and 8 seconds. I want you to give me a call, 910-494-7798. 910-494-7798. I'm Garlinda Price. I want you to give me a call and let's schedule a time to connect. I wanted to put my Calendly link in here, but I'm also recruiting, so if I put it in here, it'll end up filling up with recruiting appointments. So I'll figure out a different link we can use. So in the meantime, just message me here. Share with me your name and number or your name and email address, or text me. That'll be the best way to reach me. I'm also on Facebook under Garlinda Price, Garlinda M. Price. You can message me there. Whatever you want to do, but we need to talk and let's get in touch. I'm really focusing on being a blessing to the self-employment and entrepreneurship community, because this community has served me well for 33 years, and we're going to continue to grow, continue to expand, and I know that you are too. I look forward to helping you grow generational wealth for you and your family, and getting yourself and your family covered. God bless you guys. Talk to you soon.